Hey, good morning, everyone, and welcome to the PivotBoss Report for April 25th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis for the upcoming week. Here's a look at the daily chart of the ES. Right now, we've seen a steady uptrending market here. We've continued to push higher, and I've mentioned we're going to continue to push higher until we find that blow off top. Once we find that top, we're likely going to swing back in the opposite direction until we find a great bottom, and from there we may begin to see further distribution. But so far, we've seen a pullback off of the 2102.75 level. That's the 25% R1 pivot boss pivot on a monthly basis. And you can see the monthly pivot range here coming into support, pushing through the previous month's high at 2064 half, which has become a key level, as well as 2061 quarter. That is and remains HVN right now. So prices are attempting to hold above 2077 half, which is the top of the August range, and we're seeing another pullback into that zone, which is currently being defended. A defense off that area and remaining above 77 half would imply an attempt to push to new highs toward the primary bull target for the week, which is 2116 half, at the moment at least. Now, any failure to hold above 77.5 would open up a clear retest of 61 quarter with a potential to see a rotation back toward recent support at around 2030. So we'll see how this plays out early in the week. We have an intraday time frame here to watch out for early on, 77.5. Again, you can see here the key level, a bounce down in that level, a return, a retest, and a bounce, and now prices are trading around 5-day VPOC, which has shifted lower from 2093 down to the current price of 90, or rather 85 half. So we're at 2085 half right now and holding. So you can see right here there's an LVN that's developed on the 5-day and the 1-day profile that's at 81s. That's going to be an important LVN to watch here. So far short term, I would say that 80 to 81 right here provides a short-term area to defend as a bull for a shot at seeing a push across the range into recent resistance and the top of 5-day value, which is 2096 quarter. If we look at the primary bull target for the day, you can see 2091 is going to be the primary. So look for a 10-handle rally. If 81s are tested and defended, look for 81 to 91 as a 10-handle rally with a shot at seeing a full-on continuation into 97 quarter to 96 quarter. So that's the current idea. If you're a bear right now, then the current key pivot on the top side here is going to be the 2089s. So 2089 to 2090 right now, that's a zone where bears want to defend for a shot at seeing a push into and through 81s. So look to defend basically 91 here for a shot at 81 and through it. And on the downside right now, we'd have to see what the current high is at that point. But as of right now, this current high would bring us down to 2072s. I think right now, short term, it's buy the dips type of thing above 2081s for a shot higher. That's the primary idea. Failure to hold 81s opens up a move into 72 and down into 66s. Now let's take a look here at crude oil. Here's crude oil. This is a daily time frame of crude oil. We've continued to push higher. I've been talking about now the idea of pushing into 49.08, the next HVN above. And we've known that ever since this day right here and the failure to hold below those that previous low, that implied to us a big time squeeze. And once price pulled back and defended off the HVN down here, the expectation was likely that we could see a full-on continuation into the next HVN above, 49.08s. So that's what we're working off of now on a medium-term basis. Short term, we have to see, are we going to pull back a little bit more? Are we going to then see another squeeze higher? How are we going to play out? So I would say right now 42.60 is the early key level that bulls are defending for a shot at seeing a continuation higher toward these next upside targets. Now, on a weekly basis, we can remove these monthly ADR targets, and on the weekly basis here, given the current overnight low, if it remains the low throughout the week, which is highly unlikely, but if it remains the low, then the primary upside target for the week would be 45.78, and then 46.77 would be the full range target that puts us into the LVN. If that plays out, then this LVN right here is going to be very important. It would also match up with a 100% of average range basis. That could be a quick short-term counter trend trade opportunity for a shot at then seeing a pullback buy opportunity and completion of the move into that HVN at 49.08. So I'm just visualizing the path that we could see over the next perhaps 3 or 4 weeks. Right now, short term, the idea is just to see if we can get that piece from here on up into 45.78 by the end of the week. Now, taking a look at the intraday time frame for crude oil, you can see right here we've had a rejection of prices below 43s. 42.90 is the midpoint of our key range, so the big time midpoint of that larger swing range. Very important. You saw the rejection off that level, and we're now pushing higher. I would say, given the fact that the midpoint here has been trending lower, and then we saw some lows here, this failed new low and then a push through the midpoint here could lead to a squeeze that leads us right back into 43.90. That could be a day trade with no sweat at all, because you can see the primary would remain at 44.18. So if this low remains intact, then 44.18 is the primary target for the day. So right now what I'm thinking is look for pullbacks, perhaps into 43.15, which is current overnight VPOC. Perhaps it's as low as 43s, which has a nice 5-day LVN. Any rotation into that area could be an opportunity to push this thing into 43.90 and 44.18. So the idea is to look for signs of weakness. Buy into weakness early this morning as long as 43s remain intact. Failure to hold that level opens up rotations much lower. Okay, taking a look now at gold. You can see here gold has just basically been holding within that larger distribution that has developed over the last couple of months. We had another rejection of prices above 1270. We knew that could be the case, and so we've seen these two ideas, first defending off of this idea and squeezing, then rejecting off of this idea and bringing it back to the midpoint. Those have both worked out almost in simultaneous back-to-back days. So again, we've had our finger on the pulse of gold very nicely since the beginning of the year, and gold has been in play, but right now is clearly just chopping around the midpoint of this range. There's no clear edge, but I would continue to watch VPOC at 1236 half, because if 1236 half gives way, all of the bulls that have been defending at and below it throughout the last couple of months are going to get their downside stops run, and that's when we could make our mad dash down to the next HVN below is 1095 with a retest of 1202 half. So this is going to be very important. I don't know if we're quite ready for expansion just yet, but the time is coming. It's clearly coiled up very, very significantly. Prices continue to be rejected above these highs. I think that opens up pressure to the downside here, but you got to be able to see it first, because these lows have not even been defended since they were created. That tells you a general bullish bias, and we could still see a run through the stops above 1275s. All right, let's take a look here at the NQ. Here's the NQ in a daily time frame. We've seen a significant continuation to the upside. We've seen rotations, counter-trend rotations here be defended by bulls controlling the primary trend. Here's 43.55 as a major pivot in the charts right now. It's also the bottom of the weekly, the monthly pivot range after a higher value relationship. This all bodes well for more strength. And you can see here, very similar to those 1261s in the ES, this is 46.45, and that's the next major HVN above, which basically gives you this previous value zone. So I would say if bulls can continue to defend rotations as high as even the 43.35, or even as low as this price, you could still see a nice push higher. So I think generally speaking, the market is quite bullish. These previous highs defended off the top of the monthly pivot range continues to be in play. So I would say 44.30s is the early area to defend right now for rotations, perhaps in the 4600. If we take a look at the primary weekly bull target, 45.42 is the primary bull. 45.78 half is the secondary target. So you can see that we have a very good shot at rotating right on up into those levels. And that's by the end of the week. Now, if prices fail to hold above 44.30, there could be more price discovery and a major retest at 43.55. That's likely going to be a first test buy opportunity for a push back up. Let's take a look at the intraday time frame and we'll finish up. For the most part, we had a big time swing move lower and then a bounce back. And that's the overnight chart. And looking at going offered off of the previous month's close, 44.79. That's important right there. Now, I will say the NQ has been much more bearish, relatively speaking, than the ES. It has also had a much more leadership role in terms of correlation. So whereas the NQ has been selling off and the ES may be bullish at that point, it's been weighing on the ES, seeing this heavy pressure here. So we've seen the ES have several bouts of pressure here to the downside relative to the general market, which has then brought the market down. So that's something to watch out for this week to see if it continues to play out. There's an impulse range that is formed off the back end of the overnight range. We've also tested the midpoint of the range to seal this range at 44.58. So right now the overnight high, overnight low, and the midpoint create a very nice impulse range. From there, use that impulse range and the extensions as key levels to play throughout the rest of the session. All right, if prices remain below this previous month's close here, the expectation is for another push to the downside, and that could put us right into the previous month's low. That's going to be 43.74. If we look at a primary bear targets on the day, that could be a far stretch from where we currently are, as a 100% and 125% expansion would put us at 44.06 half. So thinking we get here today could be a far stretch, but the 2-day move down could be important, because if we look at perhaps the weekly bear targets, the 43.73 level is the primary bear target for the week. 43.37 half is the secondary. So if prices remain below this price here, the expectation is by the end of the week we could be here. On the flip side here, the expectation would be any failure to hold above that 44.79 opens up a rotation back to 45.10 and 45.33. And with the bull targets for the week, the higher end of those targets would be the primary, as it could squeeze even farther into 45.78 based on the current low. So we have a lot to think about here, but we have a very nice impulse range to play off of to start us off nicely for the rest of the week. All right, that's it for now. Let's see how this thing plays out for the new week of trading. Good luck, trade well, and happy Monday.